Most people think the difference between investing and gambling is obvious. Investing is smart, gambling is reckless. One builds wealth, the other destroys it. But here's the uncomfortable truth most people never talk about. A lot of what looks like investing is actually gambling in disguise. And the reason so many people lose money in the market isn't because stocks are risky. It's because they're treating investing like a casino without realizing it. Welcome to Aaron's Money Manual, where we simplify money so you can stress less, live more, and make your hard-earned cash actually work for you. If you like beginner-friendly investing explained clearly, without hype or confusing jargon, make sure to subscribe for weekly videos. Let's start with what gambling actually is. Gambling means you're risking money on an outcome you don't control, don't understand, and can't reasonably predict. You're relying on luck, emotion, or hope. The odds are usually stacked against you, and the longer you play, the more likely you are to lose. Most people think gambling only happens at casinos or sports books, but that's not true. Gambling happens anytime money is put at risk without a clear edge or a long-term plan. Now think about how many people approach the stock market. They buy a stock because it's trending on social media. They chase a company because the price is going up fast. They jump into options because someone posted a massive win screenshot. There's no understanding of the business, no long-term thesis, and no plan for what happens if things go wrong. That's not investing. That's gambling, just dressed up as finance. Real investing looks very different. Investing is about owning productive assets that generate value over time. When you invest, you're not betting on a quick price jump. You're buying into businesses, cash flows, and long-term growth. You accept that markets move up and down in the short term, but historically trend upward over long periods. You're not relying on luck. You're relying on time, discipline, and probability working in your favor. One of the biggest differences between investing and gambling is expectation. Gamblers expect fast results. They want excitement, they want action. Investors expect boredom. Investing done correctly is slow, repetitive, and honestly pretty uneventful most of the time. That's why so many people struggle with it. The human brain craves stimulation, and investing doesn't deliver that unless you turn it into gambling. Another key difference is control. Gamblers focus on outcomes they can't control. The next spin, the next card, the next trade. Investors focus on what they can control. How much they contribute, how consistently they invest, how diversified they are, how they react emotionally when markets fall. Over time, those controllable behaviors matter far more than any single stock pick. Time also plays a completely different role. Gambling is designed so time works against you. The longer you play, the closer you move toward the house edge. Investing is the opposite. Time is the investor's greatest advantage. Compounding needs years, not days. The longer you stay invested, the more likely positive outcomes become. Short-term market moves are unpredictable. Long-term market growth is historically consistent. Risk is another area where people get confused. Gambling concentrates risk. One event, one outcome, one moment determines everything. Investing spreads risk across many companies, sectors, and years. That doesn't mean investing is risk-free. It isn't. But it means risk is managed instead of amplified. Diversification, patience, and long-term thinking don't eliminate risk, but they make it survivable. Here's a simple test to tell whether you're investing or gambling. If your strategy depends on being right quickly, it's probably gambling. If your strategy breaks the moment prices fall, it's gambling. If your plan relies on excitement, predictions, or perfect timing, it's gambling. Real investing still works even when you're wrong in the short term, because the strategy doesn't depend on perfection. This is why index funds, diversified portfolios, and consistent contributions outperform most active traders over time. Not because they're exciting, but because they remove emotion from the process. They turn investing into a system instead of a thrill. You're not trying to outsmart the market. You're letting the market do the heavy lifting while you stay disciplined. The hardest part of investing isn't picking stocks. It's resisting the urge to gamble. It's doing nothing when fear takes over. It's staying invested when headlines scream disaster. It's accepting that slow progress is still progress. Most people don't fail because they chose the wrong investments. They fail because they couldn't stick with a rational plan long enough for it to work. The real difference between investing and gambling isn't intelligence, money, or timing. It's behavior. Gambling reacts. Investing plans. Gambling chases. Investing compounds. Gambling feels exciting now and painful later. Investing feels boring now and rewarding later. Thank you for watching Aaron's Money Manual. I really appreciate you being here and taking the time to learn how money actually works. Keep it simple, stay consistent, and remember that wealth is built by discipline, not drama. Explore the channel for more beginner-friendly investing breakdowns and practical money content, and I'd love to have you back for the next one. Thanks again for watching, and I hope to see you next time.